my key philosophy with everything is look after your people, they look after your clients. If your people are looking after your clients, you can't get too far wrong.
Hello, and welcome to the latest episode of But Is It Legal with me, your host, Simon Marshall. I'm always your host from TBD Marketing. Thanks for watching along today. Today, I'm joined by Nick Taylor, who's the CEO of Higgs LLP. Nick, can you give us a quick introduction and tell everyone what it is that you do for a living?
Yeah, sure. I used to be an M&A lawyer. I served 2 terms as Higgs managing partner, and since we've taken investment from August Equity, towards the end of 2025, I am now CEO.
Amazing. Thanks so much for taking the time to do this today. I can't wait to kind of explore some of the topics. I think Higgs has been at the forefront of a lot of people's minds over the last few months, the brand, and there seems to be a lot of buzz around it. So I'm super excited to get into it a bit. Tell me a bit about this kind of that regional brand and what's the secret sauce behind it? What is it that makes Higgs special, do you think?
Really difficult to put your finger on that, isn't it? I think to summarise, I'd say that our core values, so those of care, legacy, excellence, authenticity and relationships are not only important to us, they weave through the whole firm. So from top down, everybody, we did a full-blown exercise before we rebranded to understand what our people think, what our clients think, what our suppliers think, about the firm, what makes us different, what makes us special, why people want to work here, why people continue to instruct us, why other professionals trust us with their clients. And the ones that came out really strongly were care and relationships. So in this modern AI tech-driven world, we still believe that relationships are really special. And if there's a special source, it's the relationships that all of our people collectively build with their people they deal with on a daily basis, either internally within their teams or externally with clients and or the people who kindly support us with the work they provide. The care bit, I think, is really subtle one, in the sense of the people at Higgs really tend to care about the outcomes from their clients. It's partly because of our client base, because we're focused on owner-managed businesses. So the people who own and run and build these businesses, it really means a lot to them. So demonstrating and genuinely demonstrating that care is really, really important. So it's top down. It's really, really important. The partner group as a whole, all the way through the whole firm, those values sort of permeate through and hopefully are reflected in the interactions anybody has with.
Yeah, I've felt it, Nick. I've come into the business a couple of times, 3 times, 4 times now, and I've talked about it previously about this care from the door to the meeting room. You know what's going to happen. And today I was welcomed in again. Joe popped down to see me from the company. Didn't need to come and get involved as well necessarily. And I think it's that I felt it a couple of other places recently. What's really interesting is that I think some of the regional firms and smaller firms and national firms are doing it really, really well. I don't think it always has to be a city place. So yeah, congratulations. And I love that. That really, I'm going to ask you about the biggest success from the last decade, but it does feel like one of them is genuinely be able to put your finger on that kind of brand element, as it were, as well. Any other highlights that you'd like to mention from the last decade? I know that obviously was overseen by your managing partner role a bit, so it'd be good to talk about it.
Yeah, I think to set the scene to what we're probably going to come and you're going to ask me about, we kind of set about roughly in the last decade, certainly up to last year, about trying to become a regional champion in the field for the clients we look after. And so really hard to describe, I guess, both a region and a champion within a particular region. But we were fairly clear during that decade leading up to when we took investment what we wanted to be. We wanted to be the very best firm we could be at looking after those owner-managed businesses and the people who build and run them. So you never get a tick or at something that says that's you've done it, you've succeeded. But we felt like we'd really come on that journey during that sort of decade, supported by things like the Invested in People Gold accreditation, and lots of the sort of statistics and awards. We won Birmingham Law Society Firm of the Year and all sorts of things like that. But it is more important to us about the feel, about the place is more important than the external recognition. It's what's happening out there on the ground and what you feel out there that's really important.
Okay. Tell me a bit about we will talk about the investment. I think it's important to do so as well. Is it okay if you just describe what it is to people first and what was done by the firm and when it was done?
What
In
is?
terms of the actual investment, that was made into the business,
Yeah, sure.
in broad terms.
Yeah,
We're not asking for
no, that's all right.
codicils and details.
It's probably worth going into the background. So we spent a long time, and anybody that wants to chat this through, I'm happy to spend more time talking about. We spent a long time during 2024 working out what we were, where we were good, where we were strong, where we could improve, and we're kind of that authenticity being one of our values. We're quite happy to take feedback, criticism, we can improve, and we're always kind of taking that what can we do better approach.
Right.
During 2024 as a management team and as a partner group, so we had 31 partners, we sat down and plotted that and did the whole deep dive and analysed where we were at, took all sorts of views and opinions, so shook it all up, turned it upside down and had a really good look. And we looked at the market as well and what was going on, and that sort of success that I described, let's just for a second assume we might have become a regional champion, however you might define that, and we kind of worked out what next. So we could carry on being more of a champion in a bigger region, maybe, and we sort of worked out that the market was doing all sorts of strange things. There was all sorts of things going on in the market, increased regulatory pressure, things going on that everybody knows about with client interest, with artificial intelligence technology coming in, the whole world changing post-COVID. The whole environment was changing, and we're looking at that. And so we sat down and as a partner group, we decided we could, in the position we were, so we'd have been 22 or so million pounds at this point, turnover wise. We decided we had three options. We could carry on growing at sort of, let's say, roughly 10% £1 million a year organic growth. So our strategy was steady, stable, balanced organic growth over each of those 10 years before. To become that regional champion, we needed a certain bandwidth and size and areas of expertise to sort of say we were a champion for our client base. That was still an option. The second option, we could look to enhance that by making some small acquisitions. However, when you have a partner group with a certain risk appetite, or rather lawyers with a risk appetite that's typically towards the more cautious end of the risk appetite, and you have a partnership where you have people of all sorts of stages of their career, from those thinking about retirement to those just in the partnership. We were quite a young, ambitious partnership. You need to then work out how you fund this. And so when you go to the bank and you ask for funding to buy I'm making up, a £5 million law firm, the bank will say, yes, you're doing well, you're a profitable firm. We will lend you £2 million, let's just say. But we'd like the partners to match that funding. So we need to find £2 million, and we might get £1 million out of working capital. And so you then go to the partners and say, that acquisition, that £5 million acquisition, so everybody needs to chuck in their corner for the £2 million to match the bank, and it's only fair the bank are asking you to back your decision, and of course, that's normal practice and not a criticism of the banks. But all of a sudden then the dynamic changes. So that acquisition that looked really attractive and everybody was kind of, yeah, sounds good, looks good, it's like, okay, here's a people business, and what if? And then lawyers are great at what ifs, as you well know, are quite rightly exploring the potential problems and issues. So we then looked at option 3, which was a whole lot more ambitious, and it was essentially, if we can have, you called it the secret sauce of growing a regional champion here in the West Midlands. Why could we not replicate that in other regions of the UK? So no desire at this point to become a national law firm, but more desire to become multi-regional. So slight distinction there, which I won't go into, but there's no reason why we can't look to become that regional champion in different parts of the UK, but still fully integrate and benefit from the economies of scale and things going on in the market, whereby we considered that it's going to probably follow other professional services businesses, whereby bigger is more stable and investment's going to happen and consolidation's going to happen, which has proven to be probably the way it looks like the market's going to go.
I mean, it still feels ripe for consolidation. At a broader industry level, it feels like there's an opportunity there for a lot of those firms to come together and benefit from the economies of scale, take external investment. Would you make the observation at an industry level? It feels like there's still.
I think so. I think as I don't want to offend your listeners, but I think generally speaking, and I am generalising here massively, the legal sector as a whole is slow to adopt, to change or adapt to new market conditions. There are clearly loads of people trailblazing, doing some great things, but and we've always taken the view that we can learn from other industries, other professions, and it's kind of where the relationships thing was born from. So I'm not saying that was born, it was never not a thing, but the relationships for us has replaced recurring revenue that accountancy practices get. So accountants' clients need their audit every year and their tax returns doing so. Unless you upset the client or hike your fees or whatever it might be, typically the clients will come back year on year on year.
Of course.
It's not the same with lawyers. So you need to build those and entwine those relationships, which is why it became so important to us and in our growth. So I'm not sure whether I answered your questions.
No, I like it though. I think it's a good observation. Well, you're saying generically speaking, there are opportunities out there within the legal market as well. I don't think they all have to be hoovered up by Higgs necessarily, so we'll see. But
it's a massively disparate market. I think there's just shy of 9,000 law firms out there, all sorts of shapes and sizes, and it's really hard. It's really hard to recruit. It's really hard to afford to recruit, and it's really hard to properly train and invest in young talent, which is really important for the future of the profession. It's really hard to invest in technology advancements, artificial intelligence. There's some great stuff out there, but it's not cheap. And regulatory concerns, and as I say, client interest, SRA, moving to the FCA regulations. It's only going to get tougher and harder. So it's going to be a real tough place for all law firms over the next. It always has. It's been for a long time, but the margin squeeze and it's going to get tough. I think there's some statistics around firms that are reliant on client interest, which are, if they're true, I haven't done the analysis, but if they're true, are quite staggering, really.
Yeah, worrying. I mean, I saw them from Adil Taha's made some huge projections in that area about the sheer volume of firms that were relying on it as well. A view. I think the government needs to tread carefully in that area in terms of, but the regulators are telling us it's a done deal. I mean, it's moving over. There's no two ways about it. So yeah, that's going to be a huge feature, I think, for the next 18 months for firms as well. Back to Higgs there, really, what do people misunderstand when they hear that you've taken that investment? What is it they think? Maybe I've been one of those people, right? I'm quite happy to admit it. What is it they don't quite get, or it's not quite accurate?
I think probably I'd pick on two things. There's probably a number, but I'd pick on two things. I think private equity don't know how to run a law firm.
Right.
Again, generalizing, I'm sure there are people within private equity, but generally they don't, and nor are they interested in running a law firm. So they are backing a management team to run the law firm.
Right.
I think there's a misconception that they come in and run the law firm. So the law firm Higgs and most law firms where the investments are made are still being run by the management teams of those firms. Don't get me wrong, ours and other management teams are being supplemented with highly experienced people, and it's investments that we probably would never have made, that are really exciting and bringing a whole new perspective to managing the firm, and for the better, in my opinion. But I think the big one is culture. Um, so I am fiercely protective of our culture, as probably lots of people you have met and know at Higgs are. And everybody thinks their culture is the best. I get that. I understand it because they've lived and breathed it, and that's really nuanced and subtle. But we were very clear when we were choosing who to take investment from, that the culture was something that needed to stay. We believe passionately about it. I've been at Higgs since 1997. Standing in front of all of our people and not believing that our culture that they'd bought into would have just made me look, I don't know what, but I wouldn't have done it. And so those core values that we pushed and we thread through the firm, as I already said, still do. It's really, really important. And I think that's a testament to August in particular, who believe in that as well. I was at an event yesterday. They were running for all of their CEOs. There were 3 sections to that event. I'm breaking secrets here, but I'll tell you anyway. The 3 sections to that event, there was somebody talking from somebody who'd been on the journey all the way through to the CEOs. There were 2 chaps talking about artificial intelligence and the massive impact it's having on all markets, and then was somebody talking about culture. And so that's how strongly they believe that, particularly in professional services, consulting and the like, culture is really, really important, because we're a people business, right? Until such time as the robots come and AI takes over, we're a people business, and you can't build relationships and you can't demonstrate empathy and care and support to clients unless you've got your people on side. So my key philosophy with everything is look after your people, they look after your clients. If your people are looking after your clients, you can't go too far wrong.
And it sounds like it's almost like a unique set of circumstances there. It's like there's a certain size to Higgs that means it was able to grow and flex and maybe even vote for something like this to take place. That there's a culture that's strong and identifiable and discernible. Do you know what I mean? Like you could actually say there's something about the firm that was a little bit different. There's been a lot of talk about, PE investments over the week. Well, culturally you matched with a partner that culturally matches with you, right? So it's quite a lot though to match up on each of those elements. Do you know what I mean? At the same time, do you think there's a lot more of these chats are going to come to mean something over the coming months, or do you think that there's been a lot of, talk and we don't know really? It's maybe a lot of it's going to fall by the wayside.
Yeah, it's hard to tell. I think a number will fall by the wayside.
Right.
I think there needs to be, like any relationship, anybody embarking on this, I would urge people to spend time with their potential investors. So I think that you've got to get that right fit, and understand there's going to be a roller coaster, and it's not always going to be good times, and you need to understand how you're going to be through that life cycle, through that journey, and you've got to choose your right, because unfortunately private equity does have an interesting reputation historically, and there were a number of, particularly in the early days, law firm investments that weren't massively successful.
I had a pitch to one years ago, and I just when you were talking earlier, I just had this kind of PTSD moment of like having to go up in front of this.
Well, it's about
CEO
alignment,
journey.
isn't it, really? That you've got to be aligned in terms of, the clarity of where we're trying to go, and being in it together to achieve where we want to get to. And that's all. That's alignment management team with August. So every single one of those 31 partners that we had here voted in favour. There wasn't any kind of, it would have been, well, that's not what we wanted. Everybody was in, yes, right thing for the firm, right thing for our people, right thing for our clients. Ultimately, we care about our people and we care about the client's service and demonstrating excellence. We don't always get it right, but we do genuinely care about it, and we think we can enhance what we offer to our people and what we offer to our clients by taking this investment. And ultimately, the partners historically funded the business. It's just a different funder. It's just a different investor. It just so happens that they bring a lot more clout and a lot more expertise and knowledge of different industries and ways of doing things, where a lot of the time I'm going, yeah, that's a good idea. That'll work.
Tell me about because it must have been a thorough examination of the brand values though. When you were going through that, due diligence and the process, and kind of doing the dance, as it were, with the investor group. I think we can all go through the process at a law firm and kind of just some name words that we might put on a wall or send around in our internal emails. But I mean, it's when the rubber hits the road, isn't it? When it matters.
Yep.
So was that pleasing to come through that process and feel like, yeah, look, these values stood up? I mean, I had the same experience walking through the front door today as I did before you took the investments. That's a good start.
Yes, well, that's reassuring. Yeah. Do you know what? It's probably you haven't asked this question, it's probably one of the things that kind of slightly concerns me. So, because I'm out and about and all over the place, it's maintaining that strong link with the 300 odd people in this building and trying to build that elsewhere as well with our Edinburgh colleagues. It takes time, and so you need to be out. So you can't be in two places. So all of the partners will take on that shared responsibility of making sure that culture is really, 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 really important. But yeah, in terms of due diligence, it was really pleasing. But of all of it, it was the bit that didn't surprise me because I was worried about various things coming out of the woodwork in a monstrous due diligence process, because it was brutal. But that bit that bit didn't concern me. Other than anybody who started fairly recently, you could pull anybody in now and they tell you what our core values are and why, and hopefully agree that most, if not all, of the partners demonstrate those on a daily basis. And
But the flip side to that must surely be your advice to those firms who maybe don't have it together on the cultural front or that side of things, and the values front. Maybe it's not a process that is. It's not going to solve those issues for you as well. There's no increased harmony necessarily that's going to come through on your values side by going through a due diligence process for external investment.
but the easy answer is yes, but not necessarily. It just needs to be alignment, I think.
Right.
And so there is. It's not necessarily the case that any one culture is right. It's a culture that fits your people in your with your client base and in your particular circumstance and whatever you're trying to achieve. So I'm sure there could be a really successful different culture to ours where that's the aim and that's the ambition, and it could be a whole. We're not a long hours. It's just not like that at all. It's a client centric approach to it. So if the client needs support, or if that happens to be on a Friday night at 6 o'clock or whatever time, we kind of hope our people, because we look after them, will look after our clients, as opposed to you will be here from these times. And that's the approach. We trust our people and empower them to look after our clients.
I guess it's going to be interesting to see whether those alignments continue with the other investments that you see across the market over, coming months and years, as it were, as well. I mean, we can keep an eye on those ourselves as well. What is that investment potentially, was it allow you to do that the traditional model, the partnership model, wouldn't have allowed you to do? Is there anything that you've already done or anything that you've got your eyes on? I'm not talking about specifics of chats you're having in the market, but...
So, loads is the answer, even in just a short space of time.
Great.
So, So I talked about our potential options, the three options, and M&A being an option. So would we have committed to making the acquisition in Edinburgh had it been a partnership decision? We'd probably still be debating what could go wrong and what might or might not happen. And just because that's the very nature of it. And we've kind of ploughed on and done it. And that's not in complete disregard of risk and there was full due diligence and all the rest of it. But we thought carefully about it and pushed on and done it. We've recruited a chief finance officer. We've recruited a head of corporate development. We've recruited a head of integration. We've recruited all sorts of different parts of the business already to supplement the wider management team. We have looked to enhance lawyers as well and recruit lawyers. More of that in due course. But the plan, the fact that we've spent a long time, what's the best way of explaining it? So most private equity houses these days create what is called a 100-day plan post-investment. Forgive me if I'm telling you what you already know. That 100-day plan, so having been through what I've described as a monstrous or brutal due diligence process, all of the people that have done the due diligence are asked to contribute to an Excel spreadsheet of all the things that in an ideal world we would improve and we would be better at and would do differently and we need to change. And so that becomes the 100-day plan that the expectation or hope is that you deliver on all of those improvements. So already in the first 3 months post-completion at the beginning of December, Higgs is a much more resilient, stronger, stable business because all of that is just things that you can improve. And we passed the due diligence test, so we were all right in the first place. It wasn't that we weren't, fully compliant or doing this or doing that. It's just further areas to improve. And I think there's a bit of a misconception that private equity kind of are all about making money. Really, really care about risk, passionately about risk and compliance and doing things properly. They're FCA regulated themselves. They understand the dynamic and the environment we're operating in. And so a lot of those were around risk mitigation and improving stuff that, kind of money's no object. That's a bit flippant, but that stuff just needs to happen and we just get it in place. And
Because effectively you're looking after the asset,
as the platform, we've taken some serious investment
Right.
that they have to report into their investors. And so it's basically, it's the foundations. It's getting the foundations right on which you build need to be absolutely rock solid.
Taking the investment layer out of the equation for a minute, what's attractive about the mergers that you've done so far? What aspects of it have most pleased you?
August had a very big accountancy practice do a very detailed report setting out where we should go and buy and opportunities across the United Kingdom. But I was very clear that the first thing and the absolute must is culture. You're never going to get an exactly aligned culture, and there's always going to. But my basic rule of thumb is unless the culture is 80% aligned with our culture, we don't want to push water uphill and try and change something that's massively different from our culture. What was really attractive about both VLX and Navigator in Scotland is the cultural alignment. So the people are Higgs people, bit cliche, but by and large, the culture really matched well. Aside from that, commercially, because we want to become the UK's go-to law firm for owner-managed businesses, what it offered commercially was 3 or 4 things. It offers us a product called Navigator, which is a HR, health and safety, data protection, regulatory product designed for owner-managed businesses and people and private equity-backed businesses to control all of the stuff you'd expect that to control. And so a really good product, really good reputation, really good market share that we wanted to expand, and we want to expand across the UK and to our client base. It offered a further supplement to our already really strong M&A corporate team. So they have a large corporate team focused on the private equity world and private equity world transactions and their own market, with some brilliant lawyers, great reputations, and they were an M&A team based in Scotland, but working on UK matters and transactions for UK clients, as opposed to really focus on the Scottish legal market.
Mm-hmm.
And the last bit was something called the Legal Counsel Service, which is effectively halfway house between an in-house lawyer and an external law firm, providing support to either larger owner managed businesses or private equity backed businesses as they navigate through the world of commercial contracts, intellectual property, licensing, and they've got some brilliant people and brilliant credentials in that sector. So those sort of things attracted us, amongst others, to those two.
Just thinking a bit more about their internal kind of culture and the characteristics as well. So I felt whenever I came to this office that, having the town hall space you've got here, is an opportunity to have people together. Tell me a bit about having a multi-office firm suddenly. Has that felt different? Has that felt like a challenge or?
Yeah, absolutely. So that being able to be on the ground and in amongst people to understand what's going on, that's how you get a real feel for what's good, what's bad, where the friction points are. So you just need to work harder at that across the board. So we've had some of our Scottish colleagues down, and we'll continue, and we've had people up there, and that's just going to continue, and so that's going to take time. I'm not naive to the fact that that's going to take time to embed and make it the same. So I think in this digital world and hybrid workforce and remote workforce and people's modern lives and modern ways of working, it's people are more and more used to live video streams and such like to get message across. It's not ideal, but we're going to need to work harder at getting people face to face as often as we possibly feasibly can. It doesn't help that Edinburgh's quite a long way away, but we intend to plug the gaps over the next couple of years. And
I was amazed at how far away from this office, some people actually come in, and there's someone in the team who they travel long ways for these guys as well. And you forget that as well. Like in some parts of the country, people come from a long distance, as it were, to go to a good firm to work at. I suppose that's the nature of it as well. When you've got a culture, it draws people in. So that's good. Do you think that the skepticism behind taking those investments is fading in the market? Do you think, and do you feel some responsibility on behalf of Higgs for making people see, well, actually, this has been a good thing for the industry?
do I think the skepticism interesting? I would imagine there are always going to be people that have a view, and probably will never change that view. My take on it is hopefully there is space for everybody and every kind of structure and every kind of approach to law firm structures and investment and ownership and management. And I think everybody will find their way, and there's no right or wrong way. So I genuinely hope that small niche independent law firms are still a thing in a decade's time, and that they can find a way to thrive, and whether that's through agentic AI and other opportunities that allow people to scale without scaling headcount. It may well be, and there is as much an opportunity as there is a threat there, I think, for those that embrace it. But I think there'll always be skepticism. Do I feel a responsibility? Yeah, we don't know each other massively well. I am am quite competitive. I'm quite driven, so I'm kind of determined to take some responsibility for proving that we've made the right call. It's really hard. We're an early mover. There are others, but we're a relatively early mover. I wouldn't have done it unless I truly believed, truly believed it was the right thing to do. As I say, for the firm and for the people, and legacies, really, it's one of our core values. We've been around for over 150 years now. So, but that's the belief. So I'm just determined to make that happen. And for us, time will tell. Time will tell whether we, how it evolves and how it moves, and whether that skepticism wanes over time. I think people will twist a narrative to suit their particular circumstances and needs. And
Do you think there's deals that I love that answer, by the way. I think that skepticism is kind of what keeps us honest. Makes it, we need to keep communicating, over communicating maybe as well. I'm cool.
so I'm more than happy to take challenge from anybody, really, and I don't have all the answers, and definitely not right
No.
most of the time, let alone all the time.
Do you think those deals are more likely to be done by firms with a managing partner who is a corporate M&A lawyer,
Ooh.
or maybe a finance lawyer? It could be.
Okay, give me some context to your question. Because they are used to that world, or because people with those backgrounds and experience can get deals away?
Yeah, I don't know the answer to the question, really. I mean, I think it's both of those things. If you're carrying a drill around, everything looks like it needs a hole in it is one point. So that was part of it. And lots of managing partners tend to be employment lawyers. If you go look across the group, I don't think there's any coincidence in there. I think they're good harmonizing people. If you've got a strong HRD like Sophie, maybe you don't have to have an employment lawyer as your managing partner, and a corporate one's just fine. I have made a joke in the past that don't have a project finance one because you'll never get anything done.
So
It's a joke, by the way, to everyone who's a project finance lawyer out there.
don't. Yeah, loads of people switched off. I'll answer the two component parts of that. So I was managing partner from 2019 to 2025, end of 2025, I guess. I suspect everybody thought I would just go and buy a load of law firms and what have you. So I didn't. And we only did this because we thought collectively, and I've told you, the whole partner group were on board because we thought it was right for the firm, not because I was previously corporate M&A lawyer. So I don't think that's the case, although that's just speaking from my perspective. So there might be other perspectives out there on that. In terms of getting the deal away, my answer's slightly different. I think that is probably quite important. Now, I'm not taking credit. There was a whole team working on that transaction. However, without somebody, you would put it this way. My 20 years or so of M&A corporate lawyer experience helped me survive the deal process because, it was the heftiest due diligence process I've ever been involved in. It was hard. And so you need to remain focused. You need to be uber commercial and driven to get stuff away and get it over the line. So the second part, do I think a corporate M&A or somebody with a similar experience has got a better shot of, you either need to get people around you that bring that experience and skill set and expertise, or maybe that it'll be people in those roles.
I think I've heard William Peake talk about it before on LinkedIn, where he talks about being comfortable with that discomfiture. Do you know what I mean? I think M&A, what you're hinting at, maybe, or what I'm hearing is there's an element of every M&A transaction where there's a moment where the deal might not go ahead, right? You've done your best and you've done the due diligence, the offer's on the table, and you're just waiting for signing parties. But that hour or two can be a long couple of hours, right? Can't it? So that being comfortable with that period of time and just waiting Maybe it's true of real estate guys as well, who are waiting for a resi thing to be signed as well. I don't know. Disputes guys the same, but that idea of that, I think there's something about those transactional lawyers that they are comfortable with that. Yeah, this is just exactly where I'd expect us to be right now.
Yeah, I think so, and I think it's I think it's the experience that allows you to take a commercial view that you've worked through with your clients over that previous working lawyering experience of understanding that you're not going to get everything your way. You're certainly not going to get everything your way when it's PE and PE lawyers, because they have house positions and views and. So it's about a fair, reasoned, balanced position that you try and negotiate, not try and win off every point, and it's being comfortable that you've got that fair, reasonable position in what are quite weighty tomes of documents that are required to get these things in place. So it's the project management as well, to a certain extent, is quite important. So coordinating different people with different parts of, from ESG due diligence to tax due diligence to client commercial due diligence to legal to financial, to you name it, it was due diligence, insurance, the lot. So they properly, I said in 2024 we kind of turned ourselves up and down. It was nothing compared to what the professionals engaged by August did, but it's fine. We had nothing to hide, and it worked out right in the end.
So just final question really about this legacy point. I think it's the core, one of the core elements of those values as well. What would you, when we're looking forward, I'm not giving it a time scale, you'll notice that I'm not going to do that, but what would you like the deal's legacy, and also what would you like your legacy to be later on? Can you talk to me about that a bit?
So my strong hope is that we can maintain the Higgs culture, the secret sauce that you mentioned, the special thing it is about working here as we expand and grow and we become multi-regional. And if I walk into a different office in a different geography, I'm not expecting. I'm expecting nuances and differences, and we don't want. We recognise the importance of community in these various regions. We're not trying to create a cookie cutter firm across the board. However, that 80% feel, the Higgs feel, that if we can walk through that door and get the same Higgs feel and the same welcome and the same. Anybody outside will come and probably take the mickey out of me, and they feel comfortable doing that because I'm approachable, and that takes time, because naturally people are worried about what the future holds and all the rest of it, and haven't known me for the 25 years that some of my colleagues here have known me, so I think from a deals legacy, I could talk about improved organic growth, and I could talk about growing our client base, which is clearly very important, and servicing the clients in those regions and delivering the expertise and the excellence and caring for our clients, all that sort of stuff. But it's that's kind of what I'm trying to achieve from a deals legacy perspective. From my perspective, I think I was unfortunately managing partner just before COVID hit, and it taught me a lesson in the responsibility that I felt for our people and for their livelihoods and for their families and for them to pay their mortgages and what have you. And so the decisions, anybody that's kind of was in the same position, there was I think I'd deliberately try and forget a 5 or 6 week period where nobody really, well, it was longer than that, but aside from the horrific stuff that was going on, nobody really knew from a business perspective what was going to happen. And all of a sudden it was like, okay, the decisions I make now, and there's no rule book, will impact all of those people, or could impact all of those people and their futures and their livelihoods. And so I've got to make some real tough calls here, and important calls, which kind of brought home the importance of making sure, when I talk about us being more stable and more resilient and more all that things that we're doing to constantly try and improve the firm and make us a better. So I guess the really short answer, I'm probably rambling now, is I want to leave it in a better position than I I kind of picked it up is probably how I'd describe it in a nutshell.
I like it. I mean, it feels like a lovely kind of, it's not the end of the career, but you know what I mean? Like, just a lovely
Bit more,
part of
yeah.
the song, as it were. Like, we're 25 years in and still looking to kind of, push on and to leave in a better place. And I do think it was a tough period for a lot of people as well. So the idea of saying, well, that's where it was then, but this is where I've left it now. I think it must be nice to be able to say you made a material difference to the lives and livelihoods of those people.
Hopefully, yeah. Our purpose is to have a positive impact on our people, our clients, our business partners, and our community. So I'd be a fraud if I wasn't trying to kind of have that positive impact as CEO.
Wonderful. Listen, Nick, thank you so much for that. It's a strong signal, I think, to people who, might not work with a firm that are owner managed businesses as well. I mean, that's the way you're talking about it. Is it's closely allied to the success of the business on a personal level as well. I think that's what you want to hear if you're going to instruct a law firm that says it's obsessed with owner managed businesses and wants to look after them as well. Thank you for your time. If you've enjoyed today's episode, please tell it to a friend. If you've enjoyed today's episode, please subscribe to the YouTube channel. I've been told to tell you that by my videographer who insists he's interested in growing the channel. And then equally, if you don't follow Nick already on LinkedIn, you should. He talks a lot of sense. It'd be good to have him have those followers rising as well as Higgs continues on its journey. Thanks again.
Simon, thank you.